We've got some price action to discuss. Where are we now? 96,878. I hope you guys out there are doing fine. I hope you're doing all right. This massive crash from 107 to 96. Those of you who are relatively new here, you should know that this is not uncommon pattern in a bull market in Bitcoin. Look at 2017. We had 1, 2, 3, 4, 5, 6, 30% plus drawdowns in that run up to 20K. This happens, as we've been discussing. I think these kind of dips are going to be lower this time around because we have more demand to buy things up. So I don't think we're going to see 30% dips on the way up, but that's just my opinion, man. John, why don't you kick us off on your thoughts about this price action and take us into markets in general, if you'd like.
Basically, Bitcoin crashes to levels that most of us were not even sure it would hit in 2024 in the first place. That's where we're at. I think, you have to talk about what's going on in broader markets. And there's like a few takeaways here. Bitcoin is kind of on the world stage as a macro asset now. It's affected by Powell at a press conference. He's being asked questions directly about it at an FOMC presser. As far as I know, that's the first time he's been asked about Bitcoin at an FOMC rate decision presser. He's been asked about Bitcoin in other situations for sure, but this is the first time on the day of a rate decision that I've seen him be asked about Bitcoin. But bigger picture here, the Fed basically, they cut rates, but as typically happens, the comments that they make about the economy and about the path of future rate cuts end up having a big impact on markets, especially if the comments they make are different than what people are anticipating. And I think that's what happened this week. You get the dot plot, which is like the Fed's, expected path of rate cuts. It was a certain number of rate cuts in 2025 that lessened to a fewer number of rate cuts in 2025. He made more statements about that this rate cut was actually a close call, is the words he used, which obviously implies that there was a chance that they didn't cut rates at all. And markets are still pretty sensitive to this, for better or for worse. So you look at what US stocks did in the past few days, you look at what gold did, you look at what bonds did. And I think a lot of it is in reference or on the back of Powell's comments and the Fed's comments as a whole. So I'm not very alarmed at Bitcoin dropping from 108 to 97 or wherever it's at now. But yeah, takeaway for me is Bitcoin is a macro asset. It's gonna be affected by similar things that assets like US stocks are, for example.
100%. The S&P dropped to like 3% after the presser from Powell. I mean, that's a huge move. The VIX, which is kind of the volatility index, I mean, if you could pull that up, but it was just like a crazy spike that I think it was only the Japan event earlier this year that was higher than it. It's the largest spike in the VIX, except for that moment where everything was crashing with Japan. So, I mean, it was a huge shock. And I mean, there was a while where Bitcoin held up really well for a while. I remember it trading at like 103.5 while the S&P was down 3%. And I think the only reason it even got as low as it did is you had this kind of rates shock, which I ultimately think is immaterial. I think it's kind of nothing. It doesn't matter so much. It's just markets kind of adjusting the risk premium on equities. But then you had this kind of anxiety about the government shutdown. And this is something that kind of happened overnight. Oh, we're going to do it. We're going to shut down the government. And it's still a little ongoing. We don't know what way that's happening. But definitely markets are feeling a lot better. The S&P has recovered like half of its drop. VIX has come down. Typically, historically, on these debt ceiling government shutdown events, you always buy the dip, and they haven't really done it. We'll see. Maybe it's different this time, but I don't think it matters too much.
We do have a clip. Sorry. Go ahead, Brandon. And then we've got a clip from Tom Lee talking about the VIX and that Stephen was referring to. Go ahead, Brandon.
Okay, sorry, Stephen. If we shut down the government, does that prevent us from acquiring Canada as a 51 state, or do we have to just wait in order to achieve that?
There's a few different paths there. Depends, executive order versus Congress bill. How we, I mean, Maybe we could pick it up for 20 bill. I don't know.
Yeah, I'm glad the conversations are starting. No, in seriousness, well, a little bit more serious. Jay Powell is being asked about Bitcoin. You know who else changed their tune or is softening their stance is our boy Neel Kashkari.
Oh yeah.
Did he come to your meetup?
Did he come to your meetup? Did you buy him whiskey?
Don't spoil it. So if you guys remember in 2020 or 2021, right, he went on 60 Minutes. In my opinion, he's the Fed's whipping boy. If something bad goes wrong, they just send in Neel to take it. But he goes on 60 Minutes and they're like, hey, so you're telling me that you have infinite dollars at the Fed? And he looks real crazy in the camera. He's like, yes, we have infinite dollars. So that guy, he's been a Bitcoin hater since forever. And in November, so like a month ago, he said, I will have an open mind about Bitcoin going forward. So is that because the Trump administration is, he's like looking for job security? You know, does he realize he's fighting an immovable object? I don't know what his deal is, but he has started to soften his stance. I've been inviting him on Twitter publicly for like 2 years, and honestly, he's never responded once. So I don't know if we're getting to him, but hopefully next time he'll come around.
That's crazy. He said that. I had no idea. He's been a long time hater.
Yep. So what's going on in the Fed? Let's
take a look at this. Stephen was talking about the VIX, the volatility index.
One of our next guests thinks this is a great buying opportunity and the Fed remains supportive. Joining us for more is Tom Lee, Fundstrat Global Advisors Head of Research and a CNBC contributor.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness.
A good opportunity for investors.
The VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday. I'd say investors are tired of having the rug pull on small caps. Yesterday is an example. Unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear.
There we go. Any follow-up analysis there, guys?
I shorted the VIX yesterday. I'm up 13% today.
Look at this. How's your trade?
It's going good, man. It's but that's the thing. It's you see, I mean, when you see an outsized move like that, it has to calm down. I mean, on a mathematical index, it has to. But it's also just like it gives you a sign of how overblown yesterday was, and it was all over 0.5% of the kind of the forward-looking interest rates. Like, it's not a big deal. The economy's fine. The Fed is, I mean, you could even talk about a Trump put here instead of a Fed put. Like, Trump's coming in a month, and like he's going to want the stock market to go up. So I think this is a blip on the radar and a major overreaction. You know, chances are I think it really rewards dip buyers across all assets. And
buy the dip.
I think Stephen's strategy of, you know, assuming that vol kind of spiked up and it's going to go back down to normal levels, that is correct most of the time. The times where you always want to have a good like image of what's going on in the broader economy, because think like a 2008 type scenario. That's one where it's like it gets a lot worse from here. COVID, it gets a lot worse from here. But like those are, you know, once in a decade. We used to call them once in a lifetime. Now we have to call them once in a decade. Crises happen a lot more frequently now, but still once in a decade is not that common. So in order for Stephen's view of like, hey, this seems, you know, a little out of whack here, in order for that view to be wrong, you would have to have the view that like we're headed into some mega crisis. And I think Stephen is correct that that's not what's on the table right now.
Yeah, there's just, yeah, that's 100% it. Like you have to have something so substantial, and a 0.5% rate shift by the Fed is not that.
Exactly.
Neither is a government shutdown.
Yeah. And just remember the fundamentals here too, guys. Like, don't necessarily have to look at price action and the technicals. The fundamentals behind Bitcoin are just so extremely unfathomably to us, maybe, 5, 6, 7 years ago when we get into Bitcoin. Unbelievable, unimaginable. You've got a pro-Bitcoin executive branch, a pro-Bitcoin legislative branch, and you've got SBR that looks like it's going to happen with an executive order on day one. You've got rumors of other countries buying Bitcoin to try to front run that. And if all of this comes to fruition, Steve, we should check in on the betting markets again. But if all of this comes to fruition, 2025 is geared up to be absolutely incredible. It's a fundamental shift. We are in a new era for Bitcoin, and I like to look at the fundamentals, right? I think most Bitcoin investors do, and long-term vision. But this is an incredible setup for 2025. So there will definitely be influences, right, from the broader market. But I don't think Bitcoin's ever been more set up to thrive, even like despite market conditions, I guess I should say.
Yeah.